Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so I'm going to unmute now. Okay, there we go. Alright guys, so I'm unmuted now, so we're going to be doing the recap. Again, we are recording, so once the recording's done, I will let you know. So let's quickly jump into the dollar, talk about what we can expect for this week and pretty much the rest of this month. So dollar has come into a very strong support zone. Again, I am very bullish on the dollar when you look out into the long to mid-term. Short term, you may see some more downside, but overall, I do think the majority of the selling has been done. Okay, so we're likely going to see a short-term trace up back towards 103.65 after making this somewhat double bottom structure here, slight swing failure pattern here, while tapping into this monthly bullish fair value gap zone right here, and we're trading in this big blue zone here, which represents a 5-year support zone. Okay, so dollar over the span of 2022 sold all the way down into this 5-year support zone, and this zone to me will likely hold because everyone else in the world is bearish on dollar. If you look very closely at the sentiment on dollar, everyone thinks it's about to die. They're feeling that way as we're coming in to this massively bullish area. Be prepared for a strong dollar all the way until 2028 to potentially even 2032. Okay, so watch for the dollar to short-term break up towards 103.65. May see some selling there, but then we'll retrace back, a bullish retracement going all the way back towards 106, and then once we break this daily downtrend line, we'll have to see what the overall markets are showing us, but it's very likely you're going to see a big demand overseas for dollar. All right, next let's take a quick look at the Dow, S&P, and NASDAQ. So Dow, really incredible move since March, essentially breaking through this fair value gap, filling all the liquidity here, so we can take that right on off. Came very close to the highs of this consolidation and the low end of this fair value gap here that goes all the way back to over here. So we got very close to about the 34,300 area, just wicked off of it, just missed it. We still may get a slight move to the upside to start tapping into it. However, we are showing clear signs of weakening out, and if the dollar is going to strengthen in the short term like I'm expecting, look for some downside pressure on the Dow, going after these lows to grab the liquidity here, and then pretty much start trading into this bullish fair value gap here, potentially this bullish fair value gap right here, and then potentially lower to this bullish fair value gap here. So in this imbalance, in this move up, you can see there's plenty of room for the Dow to get through and start creating potentially a higher low from this structure here. And this is why I have a short-term bias to upside for the dollar, because I do think you could potentially see a higher low building here, and then dollar showing some weakness around the 103 zone, 104 zone, and then the Dow getting another leg up, as long with the S&P and NASDAQ. So let's actually take a quick look at the NASDAQ as well, and the S&P. So S&P first. So S&P also had a nice little pop up as well, just like the Dow. But unlike the Dow, I do think this one actually tapped into this liquidity zone. Yep, so it did tap into this bearish, I believe this is a bearish weekly fair value gap. So it was able to tap into that, and this will likely, just like the Dow, show some weakness as the dollar shows some minor strength, and it's probably going to tap under these lows at the very least to grab the liquidity there. So look for this bullish fair value gap right here, and then this larger one right down here. So look for the S&P to break back down towards around 4,000 essentially, and potentially slightly under 4, going down to 3,900, 3,995, 3,980, around that zone. Okay, next is the NASDAQ. So let's take a quick look at the NASDAQ, see how that's looking. So compared to the S&P and Dow, very overextended, I say pretty much every recap. That's the nature of the NASDAQ, just because of its, the assets it holds. It's risk on, mainly tech, so it's going to have extended moves up or down. This one tapped far higher than both NASDAQ, both S&P and Dow, tapping into this bearish fair value gap, pulling back into this green zone, and in my opinion, it looks very likely to pull a little bit further back down. I do see this green zone holding overall, unless the dollar gets extremely strong, well beyond my expectations in the short term, going towards like 105. but it's more likely going to stay within this zone here and more likely going to come back to 12,800. All right, now let's take a quick look at oil. So we're going to look at oil and then gold and silver and then Bitcoin. So oil is very bullish. I have a very similar outlook on oil like I do the dollar. Long term, I am extremely bullish on oil. I do think oil is going to be at prices that we all wish it wouldn't be. I do think that we have dropped down far enough over the last rally we had going until 2022, spring and summertime, and then breaking down. I do think we have retraced enough virtually to pretty much lead credence to a continuation of this bull market rally, in my opinion. So I do think the bull market in oil is going to continue on. I do think we are looking at years of oil rallying, and we came into a major zone between 75 and 60 and started accumulating and started a nice bounce off from there, especially because we had Saudi Arabia in this gap here pretty much cut supply against the wishes of the West, namely the US, and we're likely going to continue to see that behavior as we continue to watch the Eastern world separate from the Western world more and more. Okay, so watch for oil prices to go up because OPEC, Saudi Arabia, is not going to kowtow to what the US wants anymore, because their major customer into the future is going to be Russia and China. So they're going to cater to what they want, and we're going to probably see an increase in demand for oil as a lot of these European countries that prematurely cut their natural gas and their oil energy pipelines away before the conflict started in Ukraine are going to be asking for oil. We just got word, I believe it happened yesterday or the day before yesterday, Germany just turned off its last nuclear plants. So why? Don't know, but they did, and eventually they're going to be calling for oil because the math is clear. They don't have enough renewable energies, enough alternative energies to support their country, so they're going to need oil. And eventually they're going to have to start tapping into trying to get oil from Saudi Arabia or Russia or China. And the prices are going to be far higher because the demand's going to be far higher. Basic supply and demand. Watch for oil to go up dramatically. Next is gold and silver. Gold is also really reflecting the fear in the actual world. As you can see, broke past 2,000. Now we are starting to languish around this zone. We got as high as about 2,030, but we are likely going to break back under 2,000 next week, especially because I do see the dollar getting stronger. So look for a break back down towards, at the very least, 1975. I do think we get to 1980, you might find some demand there, but once we get towards this level here, look for a slowdown in the selling and probably another accumulation to try and attempt to break up higher. But if the dollar does get as strong as I think it will, and as fast as I think it will, you could see that extended move back down towards the 1930s and potentially even back all the way back down towards 1900. Okay, that doesn't change anything over the big picture when you look at gold. Just like the dollar, just like oil, this chart is extremely bullish. It is just overextended. So a pullback here is going to be healthy, and just I would consider it a bullish retracement. Now this retracement could take many weeks to months, but you should have the bias to major upside come in the coming years. Gold will likely take out its all-time highs and go to new levels because of demand overseas and also because of fear. Okay, next is silver. So silver, very similar to gold, obviously had a very nice extended move up, tapped into this bearish fair value gap. You will get a clear view once the stuff starts to load up in the chart. But yeah, there we go. So filled out all these liquidity pockets, these fair value gaps. So look for a pullback coming probably all the way back down to at least $24, and then eventually, if gold has that continued move down towards the 1900s, you'll probably see silver break back down towards 23 and potentially even back down towards 22, 50-ish. Okay, so you will likely see a break back down at the very least back to this consolidation here, which is around 24 bucks, and then potentially sub there going towards this low end here under this little pivot right here at about 23 bucks to 22.80. Okay. All right, now let's take a quick look at Bitcoin, see what Bitcoin has been doing. It's been having quite a time. It's been pretty impressive to watch Bitcoin over these last couple of days and weeks. So let's see what it's looking like today. So as you can see, what a move pretty much since December of 2022. We've had a pretty nice move up. Now we are starting to show some slowdown signs. We're going to go over that in a second here. So let's actually get rid of this data here. Get rid of this little Fibonacci retracement tool. There we go. All right. So as you can see, we did fill out this fair value gap. Now this is not a daily fair value gap. I believe this is a monthly or a weekly fair value gap. Let's pull out and see. This is why I do label it. So it's not just for you guys, but also for me, so I can keep track of which fair value gap that is. From what I can tell, okay, you guys can't see it, but that is actually a monthly fair value gap, bearish fair value gap right here. So it's not fully filled yet because you do want to see the monthly closure through it. So even though we are trading through it on the daily, you never know, you could start trading back under it before the monthly closes. So we can't say this is fully filled, but very likely it is, assuming we don't have a super bearish month for the rest of April, but we'll find out in a second here. I will say, looking at this chart right now, all right, this price action here is not super bullish, not what you want to see in the short term. It is showing clear signs of a slowdown. Now we could just pull back, try and come into this bullish fair value gap here, and then find another leg up. But we are starting to show some signs here, looking at this price action, of serious slowdown. If we do start pulling back here, which this is starting to look likely, and if gold and the Dow and the dollar are all going to start playing the roles, gold is starting to go down, Dow might be going down, and then you have the dollar starting to show strength, you may get the Bitcoin feeling the pressure and coming back down towards this consolidation. There's a very strong likelihood that if we do see Bitcoin breaking down from here, okay, that we're going to be coming sub this consolidation back towards about 27,000 at the very least, and then we'll see if we can hold the consolidation, because the idea will be maybe we can go into another consolidation like this and get another leg up. But if we don't do something like this, you're going to start showing signs of a topping structure forming, and you really don't want to see that if you want some bullishness going towards the 32, 34, and potentially even like 38,000. You do not want to see a slowdown actually going here and then breaking under this consolidation. So there is going to be a fight as we come in towards about 30,000 to 29, 28,000. It's really going to be the 28,000 level. That's going to be a major fight, in my opinion, that they're going to try and hold as best as they can, and pretty much keep a week or two bullish above this consolidation. Okay, so this consolidation, if we can keep a couple weeks above it, that really strengthens Bitcoin to at least reach again, get another leg up going towards the mid 30s and potentially even the high 30s. But as of right now, I would be looking for some short-term downside, back sub 30,000, going to about 28 to 29,000, and then we'll have to see from there. Ultimately, though, even if we do have a leg up going towards the 34,000s, 38,000s, I do see us ultimately breaking back down eventually. As we come into this monthly bearish fair value gap, we are very likely going to see the liquidity grab there, and then another breakdown. And now this breakdown will be very healthy. If you look at it from the longer term outlook, you want it to break down to grab liquidity, get people who are over leveraged long or who have not closed out their longs or taken out their orders, get them out of their positions, and then continue another consolidation, and then have another leg up higher. So this is what you want to see if you're looking for continued upside over a good chunk of the year and potentially the rest of the year. So you don't want to just see straight up, because that's not what a healthy asset does. You do want to see the ebbs and flows. So I ultimately do see us getting up to these levels up here eventually, and still breaking down back to the mid 20s, and really just attacking this consolidation and attacking anyone who hasn't really closed out their position here, or at least putting the squeeze on them. And then eventually we'll have that potential move even higher than the 30s going into the 40s if we're going to have continued upside, and if this is not a bear market rally. Because as of right now, there's still no evidence to say that this is not a bear market rally. Okay, there is evidence that we will go higher, but there's no evidence to say that this is not a bear market rally. So you want to keep your heads leveled. You don't want to get too caught up in the hype. It may not be a bear market rally, it may just be a bull market rally, but we don't have the evidence for that. So play the levels, play the chart, and you'll never get led astray, or at least it'll be much harder for you to get led astray. All right, so we're going to be looking for Bitcoin short term. I am looking for it to come down sub 30 to 28 to 29, and then I'll have to see the price action from there. Again, I will be very active on Discord to let you know my thoughts. If you're not in the Discord, make sure you're in the Discord. That way you can get an idea of what I'm feeling day to day, essentially. Okay. All right, everyone, that is it for the market overview, the recap. Hopefully you got something out of it. If you did, that's awesome. Give me a like, maybe a subscribe. And if you have a question, make sure to leave it in the comment section. I will answer your questions. If you have anything to say to me, whether you disagree or not, please let me know in the comment section. I'd love to hear your opinion. And if you have not joined the Discord, make sure to join the Discord. It's the easiest way to get in contact with me. If you want to learn how to trade, or just want to hang out with other traders, from experts to novices, this is the place to be. We have them all for you. All right, everyone. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care.